Hi, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. So, up on the screen here on a Thursday, we see mortgage-backed securities up 12 basis points. Stocks a little mixed. And I think some of the things that we're thinking about right now, from a technical standpoint, mortgage-backed securities looking like they're going to, this is a 2% coupon. They're getting up near price peaks seen over the last couple times for the year, and these are all-time price highs. So, technically that may be a ceiling that might kind of thwart any further advance, and it's something that you need to be tracking over the next days and weeks ahead. From a pricing standpoint, unbelievable. Freddie Mac reporting today that we're seeing the lowest mortgage of all time at 2.73%. There's a limit to how much better that can get, right? Mortgages, if the 10-year note yield doesn't come down, and we're seeing the 10-year note elevated at 85 basis points. Far cry from the 50 we were at back in the summer. So what we're seeing in a 10-year note yield is a continued trend of higher highs and higher lows. We're also seeing the 10-year note above its 200-day moving average, which is significant. But what the landscape of the market, what's going on behind the market that I would be sharing with clients and partners, is this tug of war that's taking place. Stocks are elevated. You see stocks, we're down a little bit today, but close to all-time highs. Nicely over 29,000. 10-year note yield is elevated. Why? Because we have a couple of vaccines, right? There's two now that are showing a 95% efficacy. In fact, there's another two that they're talking about today, AstraZeneca, and another one that have also high efficacy rates. And the beauty of it is there will be so many doses in the not too distant future, and so there's this optimism, and so the market is looking at that. But on the other side, we're looking at the cases of viruses. So you could see here on the Tabrasa tracker, these are record highs, daily highs. I mean, these are unbelievable levels. You see 164,000 cases in a day. Now, to put that in perspective, if you look at this chart, between the beginning of COVID, the very first of it through July, it took 144 days to reach 3 million cases. And over here on the right, from October 23rd through November 19th, it took just 27 days to get the next 3 million. So it's a meteoric rise. So we're seeing this tug of war between this incredible amount of cases and the threats of lockdowns and further restrictions, which obviously have an incredible dampening effect on the economy, versus all this optimism and hope. And so the markets are forward looking, and that's why we're seeing yields elevated and stocks elevated. But this can change very quickly. And these are the real big stories to follow with clients and folks, because remember, the Fed said the path of the economy will follow the course of the virus. And so right now the virus is taking off, but we're fighting this against the hope and optimism that a vaccine brings us. Next week is a short one. We have Thanksgiving. Markets close on Thursday, half a day on Wednesday, and a lot's going to happen in those few days. We have tons of paper coming from the Treasury, as well as some significant economic readings, GDP, durable goods, PCE. So I hope this finds you well. Have yourself a great weekend. Be safe. We'll talk to you soon. Bye for now.